Okay, good morning and salam alaikum, ladies and gentlemen. Bismillah ar-Rahman ar-Rahim. We're ready to start our second day. And we have a very, very interesting panel today. This is exploring a number of issues as to how to manage assets which are suitable for use by different stakeholders. Because with the Takaful companies are one of the big stakeholders for asset management. And as we know, Takaful companies are required to invest their assets in Shariah compliant ways. They cannot do otherwise. On the other hand, growing demand from the market, customers, pensioners, that these assets must also be managed with sustainability criteria in mind. The question has been for quite some time. Let me start with telling you what happened in I think it was 75. I am losing track of that back. The church commissioners came to us. I was at the Prudential at that time. And they said that we have a little bit of worry in our asset portfolio. Those of you who know and those who don't, the church commissioners manage the assets of the whole Church of England. The income from that assets is used to pay clergy salaries. So the question was, we have here our poor clergymen preaching that gambling and alcohol and so on is not good, but their pensions is coming from dividends from these companies. So there is an element of both hypocrisy and disconnect. So they said, is there any way we can take out some of these stocks from our portfolio and not use them in our portfolios? At that time, early days, with sort of zeal, they used to call it, can we take out the sin stocks? And this will resonate with the Muslims in the audience that this is the kind of thing we want to think about at the first level. Now, we were 5 asset managers at the Prudential who were on the top team. 2 of our team immediately said, no, we can't help you. Our own understanding of portfolio theory is that if you remove diversification possibilities, you will compromise return. So I don't want to spoil my name. Keep me out of it. 3 of us let our heart rule over our heads that time, and we said, let's give it a go. And so they started to do that, and then later on, as we heard some other time, IRIS was formed to formally screen stocks for environmental and sustainability and governance criteria, ESG criteria. And slowly it took off. It was followed by Friends Provident setting up their stewardship funds, and all kinds of other things followed. Just to cut a long story short, last year I saw a report that the church commissioners evaluated their portfolio, equity portfolio especially, and it was one of the top outperforming portfolios over the last 30 years. They haven't invested in any of this stuff. And at the same time, obviously, by last year, we had lots of studies emerging trying to show if there was a performance penalty in not investing in some of these stocks, fossil fuels or whatever. A lot of research, including some done by my students at the Cass Business School over the years, tends to show, to me at least, that certainly there is no performance penalty consistently. There might be times when you might have divergence in performance. So leading to the idea that it is no-brainer, that if you screen these things out, your performance will not suffer. Now remember that for institutional trustees, this is a very big box to tick. If I'm a trustee and I say I'm investing here, regardless of performance, I have to answer to my constituents, right? But if I can tick that box, I'm fine, at least in theory. So I think over a period of time, evidence is now emerging that there are ways to manage this process without shooting yourself in the foot. At the same time, there are now very specialized funds growing up, looking at sustainability, climate change, and so on, which tend to show again that their performance is really not seriously or compromised at all by taking this stance. They can perform it. So the last question about the Takaful assets, we will see today, where do the Takaful companies actually invest their assets at the moment? Are there any gaps in this structure? And what can be done to fill them? Okay. So what we have today is 4 lovely presentations. One on potential Sharia compliant asset management, which will also hopefully be ESG compliant. One, a presentation from Salman Siddiqui of AM Best to see this asset composition of the Takaful companies, giving the asset managers a chance to talk to the Takaful companies and say we can fill this gap. A third one from our good friend from FTSE, Maaqil Bhoyroo, showing some of the performances over the last 10 years, which he has been able to pull together just to give us a taster of what is possible. Of course, if you want to do detailed work, FTSE will want to charge you an arm and a leg. So he's just giving you a marketing spiel to take you there. And lastly, but not least, a presentation from George Latham of WHEB Asset Management, which is really specializing in an ESG fund. And George will show you some very interesting calculators, I hope, which might encourage you to put your hands in your pocket in this climate. All right, so without further ado, may I call the 4 panelists on the thing, and then we can begin. Thank you. So thank you very much. If Shiraaz, beginning with you, can you introduce yourself in 1 minute and down here? Sure. From there, on the mic there. Then we will bring you here for the presentation.
Morning, everyone. I'm Shiraaz Abdullah from Salam Investments. I'm particularly part of the global high-quality team. I'll be speaking to you about the opportunities that we see for Sharia-compliant investments.
Good morning, Assalamu alaikum everyone. I'm Maaqil Bhoyroo. I am Head of Partnerships at FTSE Russell, the leading global index and analytics provider.
I'm Salman Siddiqui with AM Best as part of the analytics team, looking after credit ratings in the Middle East and Western Europe. And we'll be looking at asset portfolios for Takaful companies.
I'm George Latham, Managing Partner of WHEB Asset Management, specialist sustainability-oriented investor. Thank you.
Thank you very much. So let's start with a presentation by Shiraaz Abdullah of Salam Investments. Shiraaz.
Welcome, everyone. I'll be discussing an exciting opportunity in the Sharia-compliant investment space. We've got our standard disclaimer on slide 2, which I'll leave up for a second. So like myself, the Sanlam Group has its roots in South Africa, but its growth is coming from international markets. There's been a strategic imperative to grow investments in the international space, and our London team is part of that. Within the group, we're seeing opportunities opening up for Sharia-compliant investments with our partners in Malaysia, North Africa, and East Africa. Our partners are actually after actively managed global equity exposure. Our team is called the Global High Quality Team, and we manage $1.4 billion in assets split between institutional funds and segregated equity mandates. Here's our team members. I think the most important thing for me about our team is that any one of them could be up here today speaking to you. And that's because we're a small team and everyone is plugged in. The reason you're subjected to listening to me today is because I have some direct Sharia investment experience. This slide is the one that ultimately people most care about in asset management. For us, it's about adding value. We want to ensure that we are giving our clients a better outcome than they could otherwise get from a cheaper tracker fund. We're currently in the top 7% of global equity funds, and we're proud to have created value for our clients. This is the extended track record of our fund manager. The fund's inception date, the Sanlam Global High Quality Fund, was 2014. This is just the longer-term track record of the fund manager. Once again, I think it demonstrates ability to add value for clients. So we are seeing demand for Sharia-compliant investments from within the group, as I mentioned, from our partners, third-party institutions, and retail investors. Sharia-compliant investors are demanding active managers which outperform, which is no different to any other investor. We believe that we can provide this. So just a bit of time on our process and how we do things exactly. So this slide's exactly the same slide that you would see for the Global High Quality Fund, except now we have a Sharia overlay. There's essentially no change in our process. You can see that here there's about 2/3 of overlap between our current Sharia model that we have and the Sanlam Global High Quality Fund. And there's also 100% overlap in the watch lists that we have. So in essence, for us, it's quite a seamless transition to create a Sharia fund. So quality is one of those words which is thrown around a lot in investments, value, another bunch of buzzwords. For us, these are the traits that we find attractive in an investment opportunity. I think on the left-hand side, the one I would point out is free cash flow. Ultimately, this is the basis of all our valuations for our companies. And then on the right-hand side, just pointing to the debt, basically, for us, low debt means we get to sleep better at night. So I think this is a fantastic one-slide representation of what we actually aim to achieve in a portfolio. We look for companies with margins are higher ROE, and free cash flow yields than the index, coupled with lower debt. And the reason, and then
we are actually prepared to pay slightly more for these because we think that these companies are better than the average company in the index. I think there are actually a few South Africans in the audience, so they might understand this, but there's a fantastic saying in Afrikaans, which is one of South Africa's 11 languages, which is goedkoop is duurkoop. And basically this translates to that something you buy that's cheap can turn out to be very expensive. So for us, paying a slightly higher price, if justified, is actually the right thing to do in the long run. Here's a quick snapshot of the top 10 in the model that we're running at the moment. I think the thing to take away from this is that we are active stock pickers with relatively high concentration. Again, if we look at this, again, we're fundamental stock pickers, so for us, we'll often have low or zero exposure to certain sectors. We're benchmark agnostic, so this is just part of who we are. Just taking you through a few companies that we actually hold in the Global High Quality Fund at this point. So Sabre Corporation is in the travel sector. This is a sector which has grown faster than world GDP, about 1.3 times for over 30 years. So if we look at this confusing slide, what does it actually tell us? Well, the point is it's actually meant to be confusing, because that's how the market reacted after this event. The company restated its accounting earnings based on a legitimate change in the business. However, for us, cash flow was unaffected, and therefore our valuation of the company was unaffected. We were able to look through the noise, and we actually used this opportunity to add to our position in the Global High Quality Fund. So once again, this slide shows that picking companies positioned to win and being patient pays off. Medtronic is a healthcare equipment manufacturer that we've held for a long time. It's a boring, steady compounder, but boring, steady compounders can turn out to be very exciting in the long run. All you need is a bit of patience. So Medtronic's 15.5% compound growth rate over, I realize it's a very long time, but 30-year time period means you can make 67 times your money. This is often a company that people look past because they don't think it's exciting enough. We think this is the slide that actually then differentiates us from our competition in the quality space. We maintain a laser focus on valuations. Despite the market becoming more expensive, we've actually become cheaper as we've sold some of the companies we love, as they've become more expensive, and bought into ones which show a bit more upside. In conclusion, I'd like to say the Sanlam Group is excited about the prospects in the Sharia-compliant investment space, and we think that once there are better options for investors out there, the space will continue to grow, and we hope to be one of those options in the coming years. Thank you.
Thank you, Shiraaz, for that. We'll have questions at the end. Can I request Salman to make his presentation, please?
Right, so I'll be looking at the asset portfolios of Takaful insurance companies and looking how they've evolved and what their characteristics are. So just to set the scene very quickly, as most of you guys here obviously know, there are certain restrictions on assets that Takaful companies can invest in. There are Sharia requirements, broadly speaking, eliminating those activities that are considered sinful or haram, like gambling or alcohol, or conventional banking, and then also staying away from riba or interest. So what that basically means is that equity investments are fine as long as you stay away from conventional banks, alcohol, gambling, etc. And if you have any cash and deposits, they have to be put into an Islamic bank rather than a conventional bank. Now the issue basically comes to fixed income. Now fixed income is the staple asset class for most insurance companies around the world. but it is not available for Takaful companies because it's not Sharia compliant because of the because it contains interest. So therefore, the substitute for that in Islamic finance is Sukuks. Now, I'm going to look into Sukuks in a bit more detail and see if Takaful companies are actually investing in Sukuks at all. So this is the Sukuk issuance over the last few years. So as you can see, it has improved considerably over the last 10 odd years. Fairly healthy, 2015, 2016, fairly quiet years, but 2017, 2018, healthy again, mostly driven by the fact that Saudi Arabia entered the Sukuk markets to help finance its fiscal deficits, and that helped the recovery in Sukuk issuance. We expect 2019 to be a very good year as well. Again, that's because that oil prices are still volatile, so we expect oil producers like Saudi Arabia, Qatar, Bahrain, Kuwait to enter capital markets to finance their fiscal deficits. So in terms of issuance, fairly healthy. In terms of outstanding, there's about $450 billion in outstandings in Sukuk at the moment. So there's plenty of supply in theory. And what that should mean is that there's plenty of opportunities for Takaful companies to be investing in Sukuk. A lot of these Sukuks are fairly well rated because they're issued by sovereign governments like the central banks of Qatar or Saudi Arabia or Malaysia, or by Islamic banks that are affiliated with the sovereign or highly rated. So again, well-rated, highly liquid investments are available for Takaful companies. The question is, do they actually invest in Sukuk? So we're going to start off by looking at the Middle East first. So this is the asset allocation for Middle East Takaful operators. And as you can see, fairly liquid asset allocation. A lot of that is, almost 50% is invested in cash. There's another 13% in Sukuk, which is quite low, and then 7% in equity. But the real issue here is the 20% in real estate, which is considered a high-risk asset, highly liquid, highly volatile. And the concerning area here is the level of Sukuks being invested in. There's only 13%.